Okay, I think we'll make a start, and I'll say a few words of introduction, and then we'll get going with the webinar. So welcome those of you who are joining us for our, well, it is our summer lecture. It's a late summer lecture, but I still think we can call it summer, and certainly where I'm sitting, the sun is shining, so I'm definitely calling it a summer lecture. And we are really pleased to have Sir John Thompson with us to deliver the lecture today. So welcome all of you who are joining us. Just a few words of housekeeping. Sir John is going to deliver his lecture in a few moments. If you have any questions, do please submit them in the Q&A box. And as you will see currently in the chat function, you'll be reminded of that. But also, if you have any technical difficulties or any issues at all and you need help, then put those in the chat function, and either Joe or Alex from our team will come back to you, and we'll see if we can sort out the problem that you may be having. But questions, please, in the Q&A function. Click on that, and we'd love as much participation as possible. We have an hour and a half virtually. We're scheduled to finish this at 6:30, and I'm sure there'll be lots of questions for John once we get going. So let me, without further ado, let me introduce Sir John Thompson. So John took over his role as Chief Executive of the Financial Reporting Council in 2019, I believe, and came in at a really pivotal time. There'd been three important government reviews. There was the review by Sir John Kingman, the Chairman of Legal and General. There was the review by Sir Donald Brydon, the Brydon Review, and there was a review by the Competition and Markets Authority. And all of these reviews really came on the back of a series of corporate collapses, which you will all recall. Obviously, Carillion, a particularly big one, but also BHS and Patisserie Valerie, amongst others. But those three in particular, I think, caught the public attention, certainly caught the attention of the politicians. And we had the usual question, something must be done. So what was to be done? Well, we had three reviews, a lot of recommendations, and then subsequently government announced in March 2019 that it was going to take these proposals forward. And in March of this year, we had a consultation document setting out what they proposed to do and looking for comments. Particularly important, and at the heart of this, is the role of the FRC. And the proposal that came from Sir John Kingman was to replace the FRC with an enhanced body, I think, with greater powers, which is known as ARGA, the Audit, Reporting and Governance Authority. And so there's a transition going on, which Sir John is presiding over as we move from the FRC to ARGO, and I'm sure he'll say a few words about that. Sir John himself has a very distinguished background in lots of roles, and has various non-executive roles as well. But in particular, before joining the FRC, he was the Chief Executive of HMRC, Her Majesty's Revenue and Customs. And before that, he was Permanent Secretary of the Ministry of Defence. So I'm sure he's got lots of governance experience, which I know he's bringing to bear at the FRC. So, John, thanks again for delivering this lecture for us. I know you've got lots of interesting things to say. I'm sure we'll have a great debate and discussion after you've spoken. So over to you, and when you've finished, we'll open it up to Q&A. The floor is yours.
Ian, well, thank you very much for that introduction. Hopefully you can hear me. If you could nod, that would be really great, Ian.
I can.
You can. Great. Good. Well, in that case, thank you very much for the kind invitation to come and talk and exchange some views and maybe debate some issues on the basis of what I'm about to say. So as Ian said, I'm John Thompson. I'm the Chief Executive of the Financial Reporting Council. I've been the CEO of HMRC and the Ministry of Defence. I've been the Chief Finance Officer of 4 other organisations. I worked for many years for Ernst & Young, double qualified accountant. I suppose if you try to identify the thread of my career, it's been about taking roles that few other people wanted and having to lead a major change. Now, I was given a free remit about what I could talk about, and in conversation with Ian, I decided I would try to answer the question, can you regulate ethics? And in trying to do so, I will try to cover 5 areas. A brief reminder of the purpose and objectives of the Financial Reporting Council and why, as a regulator, we're interested in business ethics. I'll then move on to the Business Secretary's view on how we need to further build trust in UK business. I'll then move on to how compliance with the UK Corporate Governance Code requires a company to have clarity of purpose and act ethically, why politicians and policymakers have some concerns about this aspect of business and what change might be considered in that reform program that Ian referred to, and then how as a regulator we might approach the question of ethics and ethical behaviour. Let me start then with a brief reminder about the Financial Reporting Council. And our purpose is to serve the public interest by setting high standards of corporate governance, reporting and audit, and by holding to account those responsible for delivering them. We have 4 core objectives. Firstly, we set high standards in corporate governance and stewardship, corporate reporting, audit and actuarial work, and then we supervise the effectiveness of the application of those standards. We then try to promote improvements and innovation in those areas, exploring good practice and promulgating that. Thirdly, to transform ourselves into the fit for purpose independent regulator that Kingman highlighted in his report back in 2019. And then lastly, to promote a more resilient UK audit market. Now, this combination of regulating companies and auditors and accountants and actuaries and setting standards and supervising the application makes us unique in the world. That's probably the widest remit of any equivalent regulator anywhere in the world. Our remit includes financial and non-financial reporting by publicly listed companies, as well as setting the UK Corporate Governance Code and the guidance that goes with it, the work of registered auditors of UK listed companies too. And we try to set out best practice in these areas through something called the FRC Lab, for example, our last report being on going concern. So let me start with what do we think are business ethics? And I make absolutely no apology whatsoever for stealing the Institute's definition. Business ethics is the application of ethical values to business behavior. Business ethics are relevant both to the conduct of individuals and the conduct of the organization as a whole. And it applies to any and all aspects of business conduct, from boardroom strategies and how companies treat their employees and suppliers, to sales techniques and accounting practices. Now, if you try to marry up that definition with my regulatory remit, you can see that there are a number of overlaps. So why would a regulator be interested in this aspect of business? Well, to be frank, we're interested from 2 perspectives, not just in relation to the conduct of the major businesses that we regulate, but also in the role and the conduct of auditors. Now, we're specifically interested, given our role in setting the UK Corporate Governance Code, the corporate reporting standards, and the conduct and transparency of the audit process. And I'll talk a bit about those 3 dimensions in due course. But I thought I should set out the Secretary of State for Business's view on this. In the spring of this year, he made a speech that said, as we begin to build back in the wake of the COVID-19 pandemic, Britain's economy will be boosted by open and competitive markets, our strength in innovation, and high standards of the labour market. All of this makes the UK a world-class destination for improvement, and it is built on trust. It is vital that investors and financial markets and all those who depend on the largest companies in the UK, that they can continue to rely on information which is published. He said further that we had to reinforce the UK's position in the wake of large corporate failures that have led to job losses and uncertainty amongst small businesses and local communities, that we needed to ensure investors can get high quality, focused and reliable information on UK companies so they can invest here with greater confidence. and that audit was key to ensuring investors and others that company reports are accurate and meaningful. And that requires auditors to be held to high standards, to be transparent in their reporting, and to be trusted by those who rely on them. You will notice in those remarks that in regard to both companies and to auditors, the Secretary of State emphasizes the need for trust. Now, trust is, of course, an intangible aspect of doing business and having relationships with others. And what strikes me is that business ethics is a mixture of tangible things that we can do that impact on the intangibles of business, like trust. Now, the UK Corporate Governance Code sets out our expectations for a company. Many of you, I'm sure, will know that the code has 18 principles and 41 provisions on a comply or explain basis. It is not mandatory in law. In general, standards of corporate governance in the UK are high. The vast majority of companies operating in compliance with the UK Governance Code, or they clearly explain why they are not. And the vast majority of the exceptions, which are transparently reported, are down to timing. Maybe the chairman and the chief executive, one of them departs suddenly and the other takes over the role. So most of the exceptions are down to timing. Vast majority of companies are operating in compliance. The first two principles of the code are that a successful company is led by an effective and entrepreneurial board whose role is to promote the long-term sustainable success of the company, generating value for shareholders and contributing to wider society, and that the board should establish a company's purpose, its values and its strategy, and satisfy itself that these and the culture are all aligned. The code requires that directors must act with integrity, lead by example, and promote the desired culture. Now, it seems to me that both of these principles involve acting ethically. So what does it mean then for a business to be purpose-led as referred to in the code? I think a very recent and welcome development in business and increasingly advocated by regulators and investors in the UK is the expectation that businesses should have clarity of purpose, a reason for being, beyond simply making profits. Significant as this is, a second related shift in thinking cuts potentially deeper. It lies in how business thinks about people, what motivates them, recognizing that any business is a social organization where people should be at the heart of business success. You will have seen many opinions about the social fabric of an organization, the intangibles that make an organization work, and how that has frayed while many of us have been working at home in the pandemic. Becoming purpose-led is what happens when these two ideas about purpose and people come together. It demands a mindset within the organization animated by authentic, inspiring, and practical purpose to benefit society, which shapes thinking, drives decision making, so that there is clear, simple, and a credible narrative that links purpose to strategy, to outcomes, and to impact, and that this forms a virtuous circle. And that business sees itself as creating the conditions where each person is seen as a someone, not a something, and that businesses seek to have a positive impact on the lives of all those that it touches inside and outside the business. Its goal is creating value for society. It also, I believe, says that the long-term pursuit of purpose depends on the quality and sustainability of relations, including, for example, with the natural world. And crucially, it also sees relationships as essential for success rather than instrumental in maximizing profit or pursuing goals in an exploitative way. A purpose-led business therefore adopts a long-term approach that delivers sustainable performance that benefits businesses and society and attracts support from responsible investors. Now, to be seen as a purpose-driven organization requires the board to act in an ethical way. And there are many examples of this. For example, in shared values and core beliefs and how these penetrate the organization, how the business thinks about people and what motivates them, how employees are recruited and trained and treated, how they're incentivized and rewarded, the behavior expected by the business from all of its employees, and the fostering of conditions where these behaviors become routine and habitual, forming the culture of the organization. How the leadership exemplifies behaviors in its actions, not just its words, in its actions. How decisions are made, who's involved, what factors are taken into account, like the impact on the environment or on local communities, and whether the culture encourages openness and dialogue and speaking up. A business acting in this way, we believe, also sees itself as accountable to more than just the shareholders. A recent survey of board directors by the Institute of Directors showed that 62% of them believe that they were accountable to a wider range of stakeholders, not just the shareholders. Now, this accountability question is one which politicians and policymakers and others are interested in business continue to wrestle with. Now, there are many views on this, from the very purist view that actually the board should only be interested in shareholders, all the way through to a much more inclusive and comprehensive approach. Now, there are two reasons why politicians and policymakers are interested in this. Firstly, as Ian briefly referred to, the question of corporate collapse. Whenever a company collapses, commentators raise concerns about the role of the board, whether the board was transparent in their reporting in the accounts and elsewhere, and the role of the auditor and their reporting. They raise legitimate questions about whether the board was transparent to stakeholders about key issues that faced the business before it collapsed, sometimes over many years. They also raise legitimate questions about the integrity and the honesty of the company about its situation. It has got to be very rare that a company suddenly collapses and it hasn't known that it was in difficulty. So there are legitimate questions about transparency and integrity and honesty when this happens. Secondly, the other reason why politicians are concerned here is what's called aggressive accounting. Now, accounting standards provide for judgments to be made about the board in a range of areas. So, for example, whether and when you recognize income and profits on long-term contracts, whether the value of goodwill on business assets purchased is still valid or not, whether bad debt provisions are adequate or not, and so on and so forth. Now, this isn't me criticizing the standards. Rather, there is a concern about how a company is making these judgments and how transparent it is in declaring the judgments that it's making. For example, does the board take a prudent line? That was the way I was taught a long time ago when I was training to be an accountant. Or does the board take a position which is much more about maximizing recorded profits to maintain a certain market position in the short term? Or even, possibly, one might say, driven by the remuneration of members of the board? Now, making judgments and being transparent about those judgments being made may involve ethical questions, both in the judgment and subsequently in the transparency about the judgment that you have made. Now, these are not easy points to deal with, and the government commissioned those 3 independent reviews that Ian spoke about. The Kingman Review, Chairman of Legal and General, the Bryden Review, the Chairman of SAGE, and the Competition and Markets Authority made 155 recommendations in the government to change, and some of them are very relevant to this question about ethics and purpose and so on. A few of the recommendations are relevant to accountability, to transparency and assurance given by companies to all stakeholders. And on the 18th of March, the government issued its response to those 3 reviews, beginning its consultation on restoring trust in audit and corporate governance. And there's that word again, trust. Now, for companies, several of the propositions go directly to the heart of the responsibilities of the board. The government's propositions strive to do 3 things: increase transparency through new reports like the resilience statement or the new statement on legality of dividends. They try to increase assurance through a UK version of Sarbanes-Oxley, or extending the audit into elements of the annual report, or thirdly, increasing accountability, for example, on the audit committee chair and the role of the audit committee on the integrity of the numbers being reported. It should make it clear that the FRC is in full support of the government's proposals restoring trust in audit and corporate governance, and you'd probably expect that. But one of the issues which we as a regulator has to consider is to what extent we use hard levers like the imposition of law and fines and rules to impose ways of working on all companies irrespective of whether they're high performing now or not, when actually what you're really trying to do is target poor performing companies? Or should we use other levers like highlighting best practice, innovation, thought leadership to set the tone for the market, knowing that many companies will behave in a very positive and responsible way, but some will not, and they will ignore best practice? That will include how they act and behave, how transparent they are. Now, some of the questions for the FRC relevant to business ethics include whether, for example, we should have minimum powers over what directors do or don't do, setting minimum standards for them, including how they behave. Secondly, to what extent should we have powers to publish material the company does not publish, but which we consider is in the public interest as a result of our work? And thirdly, whilst we consider our role to act in the public interest, to what extent should we try to define who companies are accountable to and what information should be published to hold them to account by parties who are not shareholders? Now, ministers have argued that the regulator should be given powers to consider these and other relevant questions, setting minimum standards and supervising their application in listed companies. Others may argue that that goes too far into the running of a company and how it behaves as an organization and how the individuals behave and how it's held to account. And I'm sure there'll be some views on here about to what extent should there be hard powers used and regulation used over setting best practice and guidance and codes and so on. So far, we have tried to work with others like the Institute on striving to set out expectations and highlighting best practice and innovation. Our recent work, Culture and Conduct in a Purpose-Led Business, or our work last year on the climate thematic, illustrate what we can do with others to promote high standards in business. It is my view that we can and we should do more in collaboration with others, but we should be wary about being definitive in these areas or legislating for them. Whether we should be given hard powers to set minimum standards and make everyone comply to them is a genuinely interesting and open question. Let me explore the question of accountability just a little further. For us, I believe the most helpful contribution that we can make as a regulator is in promoting useful disclosure in the Section 172 statements. The board should understand the views of the company's key stakeholders and describe in the annual report how the interests and matters set out in Section 172 are being considered in board discussions and decision making. Now, these statements were introduced in the company's miscellaneous reporting regulations back in 2018, and they were first applied to reporting periods after the 1st of January 2019. In our best practice report on 172 statements published last October, some companies told us that the new requirements have made boards and management think more deeply about stakeholders and accountability and transparency, which together illustrate and in a transparent way how they're behaving. Section 172 recognizes that companies are run for the benefit of shareholders, but the long-term success of a business is dependent on maintaining relationships with all stakeholders and considering the external impact of a company's activities. To illustrate best practice in our climate thematic, we identified 2/3 of companies had set targets with respect to climate change, but only half had explained how they'd performed against those targets. Now, those disclosures are welcome. They increase accountability. They demonstrate high-performing companies have woven climate issues into decision-making and culture. Given time, companies will set targets and report against them will increase, but will they all do it? Well, there's an open question. And what should I do as a regulator if they don't all do it, but the vast majority do? As a regulator, we are seeing some companies report more extensively and think much more clearly about accountability and what they're responsible for, but not all. And so we have to consider what more we can do to drive up standards of all companies across the market. Using minimum standards and codes and best practice should deliver change, but will it be enough? And will it be consistent and comparable? Although not necessarily relevant to this audience, I should briefly mention the question of ethics and auditors. For auditors, the question of ethics is one which has been internationally codified. And over the last few years, the code has been further developed, strengthened, and broadened. And the last revision in December 2019 covered 6 broad areas and ran to 105 pages. Now, those 6 key areas revolve around relationships, the length of engagement, the question of independence, the questions of fees and gifts and hospitality, additional services to be sold, how auditing small companies which lack management capacity and compliance, and so on. The code illustrates what might be codified, but it isn't possible or easy or desirable possibly to try and define every circumstance that auditors might face and give them ethical guidance to follow. This paternalistic and very heavily defined approach to the question of ethics does not sit easily with me as a regulator, and therefore my view about audit translates into my view about companies. Could we actually go down a paternalistic and heavily defined approach of, can you set an ethical code applying to companies? Given that ethics are about moral principles that govern a person's behavior, or the conduct of an activity, defining this in a way that could be regulated and complied with seems to me to not be the way forward. Let me conclude by addressing my question then. Can you regulate ethics? Well, frankly, I lean towards the answer, probably not. And maybe neither should we try. Surely we live in a business world where people should act with integrity, be true to their values and conduct themselves and influence the rest of their organization in accordance with those ethical standards. If we need to rely on the regulator to tell people how to behave and how to be transparent to those that they're accountable for, surely we have failed as a business community. Thank you very much for listening. Ian.
Thank you very much, John. A really stimulating presentation, lots of interesting issues raised, lots of food for thought, and a great sort of tour of the issues and the challenges that you face and business faces and government faces. And it did just occur to me that, you know, that question about, you know, can you regulate, should you regulate, how far it's about hard measures versus soft measures, interestingly is reflected in the day-to-day work of ethics and compliance practitioners. Those 2 dimensions, so compliance on the one hand, ensuring that people comply with the rules, comply with the law, comply with the you know, what the company expects, as well as what, you know, regulators expect. On the other hand, the ethics dimension, which often is dealing with the way we make decisions, where you can't always legislate for it. You can't always tell people that there's a rule that they should apply. Sometimes you just have to make a choice. So the question is, what guidance can we give people to make those choices? And I think that's why this is such an interesting debate. Now, before we sort of move into Q&A, a couple of things just quickly to say to everybody. First of all, please do put your questions in the Q&A box. We want this to be as interactive as possible. I see there's one there already. It's going to take me a moment or 2 to read it, so I'll come back to that in a minute. But actually, as I'm talking, John, it gives you time to read it, so that's a good opportunity. But please, yeah, so please put your questions in there. And also remember, you can vote for these questions. And that helps me and John to know which ones you would most like John to respond to. So there's a little thumbs up at the bottom. And if you click on that, it starts counting up. So if you think it's a good question, you've only got 1 to vote for at the moment, so it's not difficult. But if you think it's a good question, click on the box, click on the thumbs up. There's 1 person's click, that might be John, and then we'll make sure that we answer them in that order. The other thing to say is that we're live tweeting today, as we usually do on these sorts of events. So please feel free to get onto Twitter if that's your one of your preferred social media channels, and use the hashtag Business Ethics Matters. Business Ethics Matters. And I don't know whether it matters, but we usually do a capital B and a capital E and a capital M in Business Ethics Matters, but I'm not sure whether that matters. Let me go to questions. Now, we had a couple in advance, and I'm going to just pick those up first, I think, because it's really good when people do submit questions in advance. It's very helpful. So the first one, John, if I may, is what is the FRC doing to encourage boards to include directors who have compliance expertise? So how do we encourage people with compliance expertise to become board directors, non-executive directors? And how are boards holding executives to account for promoting purpose, culture, and ethics? What's your view on that?
Well, our view about the construct of a board, and both in terms of size and skills, is that is a matter for the company, because it's an issue which can only really be decided in relation to the scale of the business, the nature of the business, how complex or simple it is, and so on. And if you look at those companies which are on the London market, I mean, clearly at the top end they are enormous organizations with global reach, and at the other end they are relatively straightforward businesses, sometimes only do one thing. So we believe that it's right that the board should make that decision. And you do see quite different sizes and skill mixes on UK boards, and to some extent that is down to the chairman, I think, if we're being completely transparent, and we think that that's right. The code is relatively clear that you need the capacity and capability necessary to be able to deliver the business, but again, that's a decision for you. Many people, in commenting on the white paper which was released by the government in March, were of the view that what the government was doing was saying that we needed more of a compliance culture. We needed people to understand, members of the board, much more to understand compliance, to understand internal control, to understand behavior, to understand transparency and accountability and finances and so on. And if we're being completely frank and honest about that, it almost certainly does require more members of the board to really understand the position of the company and how it's acting, what it's doing, the risks that it's taking, how that relates to reward and investment and accounts, and corporate reporting, and who they are accountable for, and so on. And many have commented that what that would mean is that there will be more responsibilities on non-executive directors. It will require a slightly different skill set, and a more dedicated skill set into the particular area that we're discussing. I wouldn't disagree with that. I think that is a fair comment on the general move of government. Now, if you talk to company chairs, I mean, I think there's a bit of angst about how to get the right balance between reporting and compliance on one hand, and strategy and business development and growth on the other hand, and how to get the right balance between those two in the boardroom. And that is something, again, which we say, well, that's for you to decide. Excuse me. My apologies. And that is for you to decide. But will it overall mean probably you need more directors with that kind of skill set? Yes, probably in the end. But it might mean you get having a bigger board by adding on some of that skill rather than changing the existing dynamic on the board. I'm sorry, there was a second half to that question. Can you run it again?
So the second was, how are boards holding executives to account for promoting purpose, culture, and ethics?
Well, my experience in our report on this demonstrates that many companies do hold the executive to account in this area. Now, this is one of those questions which goes to sort of the end of what I've just said in my opening remarks, which is you will find excellent examples of boards being really conscious about purpose and objectives and strategy and resource allocation, and how that penetrates the organization and the treating of employees and the treatment of customers and suppliers and so on and so forth. You will find some companies that are right in the middle of that, at the forefront of that thinking, but you will find some who aren't, who are concerned much more about other things, however they see it. I think the general drift is towards this area. I mean, it's a couple of years ago now, but I was very privileged in my previous role as chief executive of HMRC to join 99 other chief execs in the annual SAP Chief Execs Forum, which most of those chief execs are SAP's biggest customers, and they're mostly American. And almost without exception, they were very concerned about, what is our purpose? How does it appeal to customers, to suppliers, to employees? How do purpose and values and how we behave and how we act and what we say, how does that penetrate through various communities and inter-stakeholders? And so there's a very clear focus in the States, I think, certainly from that sample of 99 other colleagues in that area, and the board holding them to account and chairs holding them to account, and so and non-execs playing a key role. Not quite at that place, I think, in the UK, but I don't think we're that far behind. But again, it goes to a question of consistency. You will not find a consistent pattern here. Everyone, I mean, if there are people on this call who think, yeah, okay, that sounds fine, that may be where the majority are, but my experience is not like that. I can quote you, well, yeah, you are going to be able to do that, because this is an area where it's, to illustrate my point, quite difficult to regulate a minimum standard. What we can do is promote best practice, say these are the things which we think you should do, and see how the market reacts to that. And coupled with that, where are investors? Because investors can make a significant difference here. If investors are interested in this, if they want reporting, if they want transparency, if they want accountability, they can get it through the use of their votes. And so a key constituent group for me is to talk to investors quite a lot about what can you do to influence the behavior of the company to move down this route. So it's a kind of combination of all of that. The best performing companies will do it in accordance with the question, but not all will.
Okay. Thanks, John. Right. The question with the most likes at the moment is from Hugh. And so I think and it was the first one, so appreciate that, Hugh, thank you. And one of the questions we had in advance sort of relates to it as well, so if we may, we'll take them both together. So Hugh says, many people who have experienced unethical behaviour relate that companies, regulators and government alike appear extremely unwilling to actually hold individuals to account. Mistreatment of staff who raise concerns of the public interest comes to mind. Regulators sometimes say they have no powers to investigate individual cases, which seems to be very unsatisfactory for whistleblowers who have lost their careers after speaking up. Do you agree that regulators and other authorities should take a much more robust approach when it comes to holding companies and individuals to account for unethical behaviour? And the question that came in advance was, when considering the wider practical issues of what ethics looks like in action, how is the ongoing poor treatment of whistleblowers to be addressed? So is there more regulators could or should do, and how can, if we believe that whistleblowers often are badly treated, what can we do about it?
Well, I think this is a really interesting area. I think, look, forgive me, there's about four or five different points in this, so this might feel like a lengthy answer. So is there more that we could do to hold individuals to account? Yes, probably. I mean, I do think that we have a decent track record as a regulator for holding people to account, for particularly auditors, for levying really significant fines for ending people's careers, for having them banned from ever doing audit ever again. I could quote, we probably do between 6 and 12 of those cases a year, and the impact on the individuals is very significant. I think. Now, could we do more of that? Yes. The government is of the view, well, it was of the view in the white paper, that we should be given more powers in this area over all qualified accountants and actuaries, so that we could actually step into the relevant institutes and beef up the regulatory and disciplinary processes. So I think we've got a decent track record in that. The question about the observation that some regulators would say they have no powers, that may be true. We don't have that view. We believe we do have powers. We are generally handling a small number of whistleblowing cases at any particular point. I can think of probably 3 that we got at the minute where people have decided to not raise their concerns through the relevant organization, but to come to us. We will take those in confidence. We will deal with them, and a number of outcomes are possible, because sometimes what people are seeking is some sort of corrective action, not necessarily individually taken. And I can think of a case where a whistleblower came to us, made a series of statements, we investigated those, and in relation to the relevant PLC, as it was, there was a significant restatement of their accounts as a result of the whistleblowing case. So I am of the view that we do have powers. Now, could I deal with more powers? Yeah, sure. We'd be happy to have more powers, and we would take more action. Is there more that could be done? Well, yes. I mean, look, our view is that critical to the success of any kind of whistleblowing or speaking up policy is to make sure that there's anonymity between the whistleblower and the management, and that the best way of doing that is to have some independent party between the individual and the organizations, and that policies that enable whistleblowing in a safe space really need a clear set of policies and a clear process so that people can follow it. They know where to go, they know to ring, they know to talk to express their concerns, and so on. And that actually building and demonstrating trust is a key element of this. And some of our best performing companies in the UK are transparent about what they do when they have whistleblowing, because we think that transparency helps to build trust in the workforce. For example, that actually we had this whistleblower and this is what we did, and there weren't dire consequences for the individuals. Some companies do publish data on this. Some audit committees do get quite heavily involved in it. I mean, my own audit committee is very interested in any whistleblowing cases, and we'll go through that and demonstrate that there is independence from management. We think that also helps to kind of build trust and reinforces a culture that you can be safe to do it. We do think regulators have a role to play, and whistleblowers can raise concerns with us anonymously. Is our view that the FCA also does that too. I can't speak for them, right? Now, is there more that can be done, and can people point to cases where the consequences for the whistleblower were significant and material? Yes, we can see those cases. Could those individuals have been protected to some degree? Well, possibly. I mean, I'm not aware that any of those cases are ours, but you certainly do see examples where it's handled very, very badly by the company in a very defensive way, and we would not encourage that in the slightest. I think I've set out the principles that we try to adopt because it is an important element of being held to account for behavior, and people need to feel that they can do this safely. So I think we're in a sort of mixed place where you can see really excellent behavior, again, another pattern to this conversation, right, in the market, but then there's a very broad spectrum all the way to some really extremely poor behavior, of which I can think of a very extreme case, which I probably best for me to not quote.
And it's interesting, isn't it? We all see it from the perspective we're coming from. So we work with lots of companies on their codes of ethics, on their ethics programs, and a key element of that is the speak up work. And often it's the compliance and ethics function that manages the speak up investigations and so on. So, and what we see is lots and lots of developing practice and lots of interest in trying to improve the process. So, but equally, of course, we see many cases, and particularly we've seen it during the pandemic, increase in cases of whistleblowing. And, you talk to, some of the whistleblowing charities like Protect, and you see, significant numbers of cases coming through to them. So it's interesting. And of course, sometimes it's difficult to tell, companies that are doing a good job in setting up good arrangements, it can result in more whistleblowing. And that's not a bad thing. It's good that people then feel able to speak up. So anyway, I think
and look, I think a really important point that needs to be made is some people will not feel safe whistleblowing within the organization.
Yeah.
Because it's the organization, they feel like it's the organization that's doing something wrong, and they need to be able to feel like they can do this through independence. So, my first principle was it needs to be someone who's transparently independent of the entity concerned.
Yeah, absolutely. And I think that's something we completely recognize and support. Right, I've got a couple more questions that I've got that are sort of topping the top of the pops table, as it were. So let's go to Sophie's question, Sophie Wales. And Sophie asks, I share your view that we shouldn't have to rely on regulation to ensure business will act ethically, but recent cases have shown that some directors don't consider they have ethical responsibilities, only profit maximizing ones. Should there be, I think this is an interesting question, should there be a code of ethics for all statutory directors of large companies where they declare that they will individually sign up to abide by ethical principles? This would be a personal responsibility in addition to the corporate governance code. So it's not the corporate responsibility, it's the individual responsibility. And I know in a lot of what you've done and the latest iteration of the corporate governance code, the emphasis on the role of directors is probably higher than it ever has been.
Well, look, the straightforward answer to Sophie's question is yes. I think a code of conduct would be for directors would be a good thing, and I can speak as the non-executive director of a company, of two companies, neither of which are publicly listed, so I don't have a conflict of interest, just for the record. Just really clear, sorry, just in case. I think that, well, let me reiterate a stat. I think we are now in a place where the majority of directors believe that they're accountable to more than the shareholders, and that it's not all about profit maximization. Now, that's not universal, because I think that the stat was 62%, but that's still the majority. That's the large cohort of people. Now, if they're broadly evenly split, they'd be the majority on boards, but that doesn't mean all boards will be in that place, but there'll be many members of boards who'll be saying, hang on a minute, we are accountable for other things other than profit maximization to shareholders. And actually, if you talk to investors, it's not necessarily about profit maximization. It's about building long-term value. There are certainly some very responsible asset owners who would say, hang on a minute, this isn't necessarily about profit maximization. It is about building long-term sustainable businesses. And by sustainable, I don't mean environmentally sustainable, I mean sustainable. Now, could that be strengthened by having a code of conduct for directors? Yes. It's a straightforward answer. That would be good. The government did put out, that was one of the questions in the consultation. We wait to see what the government finally decides. So I'm afraid you'll have to watch this space for probably somewhere around the end of November, beginning of December, in terms of what was the government's response to people's response to its own white paper. But don't be surprised if actually the new regulator is charged with developing a code of conduct. And we would seek to do that through co-creating it with some relevant organizations that would have some expertise. Your own, I could think of a couple of others too, where we'd actually say, well, how does a code of conduct really work? What would it say? And then we could bring that in by saying, well, okay, that's now an addition to the code. We could make it guidance to the code if we wanted to bring it into the comply and explain model. So yeah, I think it's a good idea. I'm afraid it may take a little bit of time to get there.
Sure. Well, that's helpful. I think that's very positive. Thanks, John. So the next question is from Louise Terry, who is actually one of our IBE board members. She's a trustee. And her point and question is, do you think ethical behavior or behaving with integrity goes beyond compliance? Spent my career in corporate affairs in companies and have acted as the main counsel on corporate behavior and stakeholder engagement. Would love to see more people with this background on boards. I don't know whether you want to.
Look, I think Louise's question, sorry, I nearly said Terry's question. Louise's question is a good one. Yes, I think I'd probably lean towards yes. It does go a bit beyond compliance, for all the reasons that we talked about. Ethics, culture, and so on is sort of intangible thing, isn't it? You can write down a set of rules, you can write down a code, a framework, so on, but it comes down to human behavior in the moment. How do you behave? What do you say? How do you act? In all kinds of ways, whether it be strategic or individually, in the moment with customers, with colleagues, and so on and so forth. So it is more than compliance. In my sense, it's about how you are, how you act, how you make decisions, how transparent you are, you feel you're accountable to, and so on. So yes, but as I tried to illustrate in my talk, there's this kind of rather interesting question about what do you write down. So I think we could relatively easily, with you and some other colleagues, develop a code of conduct. They could put it out. It'll be half a dozen pages long, something like that. That will not. I'm not trying to, and neither do I think we should say, in this situation, this is the way you should behave, because it's about, it's about you. It's about how you behave, how you think, how you act, what you say, what you do, and so on. And I think that's quite. I mean, trying to do sort of a paternalistic, here's 300 pages of what you need to do, I think would be a mistake. And there will be some tension in that, because people say, well, this isn't detailed enough. What am I supposed to do? Well, use your judgment and act in an ethical and responsible way. Some people will need some more help in that than others people will. Some people are just very natural, some people won't. And so it's quite difficult. No, it's not difficult. We can write down a code. We can move forward with that. We could say that's best practice. Comply or explain. How far you go and how deep that goes will be the subject of some debate and probably some criticism and some support at the same time. So interesting way forward.
Okay. Right, we've got, I'm going to start seeing if I can combine some of these questions, although I'm conscious they may make them a bit complex. So David Isherwood says, do you think that broader transparent corporate reporting, such as ESG or integrated reporting, along with assurance thereon, will give stakeholders more opportunity to hold people to account? And I think there's an interesting question here, which is about reporting and the whether it gives people greater influence over the company, whether that greater transparency actually works. And I guess there's a question as to whether people will actually use it and who will use it. So ESG, of course, has become quite a big movement. Integrated reporting, I know, is something that's been heavily promoted, and of course there's the whole question of the strategic reports and how effective they are, which we could probably bring into this.
I'd look straightforward answer to David's question is yes. So I'm a great believer that companies are accountable to more than the shareholders for all kinds of reasons. And what the government was laying out in its white paper is there are essentially two parts to the report. There's the front end, which is largely non-financial or narrative reporting, and then there's a back end generally, which is the statutory accounts. That second half is well regulated, internationally defined. There are standards to be complied within the company to produce the accounts, and there are audit standards to apply to that in order to get a true and fair view, right? So we just park that for a minute. What about the rest of it? What about what it actually says about the impact of the company on the climate, for example, or on local communities, and so on and so forth? And that part of it, there is not an international standard agreed that says this is the way in which we think you should report ESG matters. Now there is a broad consensus that about the metrics that should be used, and therefore you can drive comparable standards. We're not quite there. We're not there globally, and I think it'll take a bit of time for us to have a sort of international financial reporting standard for non-financial reporting. That makes sense. Although there are some significant moves to establish a global body to set those standards, which would then mean that, well, first of all, you add consistent reporting, which drives comparability, and second of all, you definitely add direct accountability, because you could say, as a chemical company, you're producing significantly more, carbon emissions than the average chemical company, and the best performing ones are down here. So, what are you doing? And it does bring a direct accountability. And although this conversation might slightly sort of turn into sort of shareholders and other stakeholders, actually shareholders are generally really quite interested in some of these non-financial reporting metrics, particularly the environmental ones. Particularly how they relate to risk for the company in terms of its building sustainable long-term value. So yes, it would definitely do it. Yes, could it be integrated? I'm a great supporter of all of that. It definitely would drive accountability. As long as we could do it on a consistent basis, then I think we would see much more accountability to a wider range of stakeholders.
Okay. And I think that answers Robert Smith's question as well, which was a bit lower down, which was, given the increasing focus on ESG, where do you see regulation and standardization of non-financial reporting? I think you've answered that.
So briefly, we are very clearly in favour of SASB metrics, if people are familiar with those, are Sustainable Accounting Standards Board metrics. And as are a number of investors, they've already made it clear that is generally now sort of UK position, whilst we wait for a global standard to be developed.
Okay, great. Right, going back up to, I know what I was going to do. There's another question that came in advance, and I just want to cover that because we're talking about non-financial reporting, and I think this is relevant. So it's one about culture. In its annual review, the FRC found a wide variance in assessments of culture and the metrics that companies are using. What is being done to encourage or require boards to conduct these assessments and to improve how they are done? How seriously are boards taking organisational culture since the Corporate Governance Code was amended?
Thanks. Well, we did indeed do a review in coalition with your good selves, and the Chartered Institute of Personnel and Development, the Chartered Institute of Internal Auditors, and CIMA, which was, well, it's a few years old now. And I mean, there's a really excellent report, I think, from 2016 that sets out expectations. I mean, the truth is that this is an area where we do not set minimum standards, but it's one of those classic areas where we can encourage, we can identify best practice, we can report best practice, we can encourage people to have best practice, we can put more pressure on for best practice, and you will see the majority of responsible companies move that way. But again, to reiterate a point that's consistently come up here, you will not get a universal application of that. You will see it grow into the majority, but not all. And then the interesting question comes up of, well, should the regulator therefore set some minimum standards and regulate, supervise compliance? Well, in the end, what ministers have to make a decision about, and we're right in the middle of this, is what areas do you actually want to set legislative minimum standards and have them supervised by a regulator? And what areas are you prepared to let best practice and the market decide with the pressure of stakeholders as a way forward? And this is one of those on the list of, is it in the first category, let's legislate minimum standards, supervise application and so on, or is it in the second category? And I'm afraid you have to wait and see what the white paper says about which category it makes.
I mean, it's interesting. It goes back to your point about, can you regulate ethics in a way, doesn't it? I mean, ethics and culture are really sort of two sides of the same coin, I would argue. And whether you can regulate it, whether you can specify how to measure it, strikes me as, as probably, a pretty difficult thing to do. But certainly, in my experience, working with, professional bodies and business organizations and so on to develop codes that if you like, are endorsed or supported by the regulator or regulators, can often be quite effective.
Yeah, I think it's a really interesting question, which is everyone's question of, question, can you measure it?
Yeah.
Well, I think you can measure culture. I mean, and there is quite an interesting growing body of evidence about the measurement of culture through asking people about how they're feeling about issues and so on and so forth. And some experts argue that culture can't be measured. Some do say that culture surveys are possible and are a useful tool. What I can say is I've certainly found that elements of measuring the culture can be super helpful for the management and the board of organizations. Look, I mean, to be transparent about it, we did do cultural surveys at HMRC to understand how people were feeling about working in a 65,000 employee organization spread from Dundee to Cornwall. How did that feel? What was it like? And how does it manifest itself on them in terms of policies and processes and the way that people are behaving and so on? And you do get some very, very interesting information from people through anonymized surveying about what's it really like to work here. And when you're the chief executive of something like I am, actually you don't really understand what it's like day to day for Sandra working for Sue in an office, 150 miles away from where you are? And what does it feel like in Lincoln as opposed to, Birmingham, as opposed to Newcastle, as opposed to Belfast? And the only way to do that is begin to ask people in a safe way, in a group way, to get them to talk either anonymously or sometimes not anonymously, and sort of develop a picture of, hang on a minute, this is what it's really like to work here. And you can do that also with suppliers, and you can do it with customers. So you can build up some evidence about what's it like to be here, which goes to the heart of what's the culture like. You can ask people, do you think it's open and transparent? And they can give you a sense of it or not.
Yeah.
And you can change the way in which you run. So one of the great things I think we did at HMRC was switch to a model of co-creating people policies with the people. You hate the performance management system, fine. Well, you designed that. When we put that question out early on in my tenure, more than 40,000 people came forward to say, yes, I want to get involved in the performance management system, because we all hate it, and it goes to the heart of how we're treated as people and the culture and so on. And then by co-creating something with them, they own it, and then that changes the culture as well, right? So there are things you can do that you can measure. I wouldn't regard myself as more than an amateur in this place, and I wouldn't put myself out as any kind of expert. So my view is you can measure it. There are techniques. There's people out there who can tell you that they can do it. It's not universally accepted, but I think we should move towards that.
Yeah. Okay. Right. I'm gonna sort of maybe jump a couple of questions, particularly for those where we've already responded to previous questions by the same person. And I'm trying to follow some themes and threads. So trust was something you particularly touched on, John, in your presentation. And I thought this was an interesting one from Roland Jack. Vertical trust in institutions and leaders has been badly damaged globally, although the FRC and many others seek to rebuild it. We've seen a variety of new developments in horizontal trust in recent years, such as online review systems. It is recognized that these horizontal trust systems also have flaws. What do you see as the next developments in trying to repair lost trust in society? It's a big question.
Wow.
Well,
I didn't realize Roland was going to ask us a corking question, right? Well, look, I mean, what you can do is, when you're running an organization, so if you're running a company, you're the board of a company, you have got to think deeply about what are you really here for, the question of purpose, and how that impacts on your organization. And most organizations, here's my opinion, that most organizations will only be successful and sustainable in the long term if people trust them, whether they be employees or suppliers or customers. I mean, our day-to-day experience of buying something can be positive or negative. And I'm one of those people who does online reviews, says what I think. And if I think it's great, I'll say it's great, right? And I'm also one of those people who sort of has a look around the market and says, well, people don't really like company X, so I won't go there. I'll go to company Y. And it seems to me that will only continue as we go. I agree there are some flaws to that, but I think in general there is now much more transparent information that you can access fairly easily about what people think about their experience of being a customer or a supplier or an employee of a company. We live in a much more transparent world, don't we, of kind of people instantly putting their views out or putting it out in a more considered way. And I can only see that going. And then that goes to the heart of the vertical question, right? So if you're serious about running a long-term successful organization, you have got to think about what are people saying about you through whatever dimension they're saying it, right? And then that goes to the question about, well, hang on a minute, who am I accountable to and what am I accountable for? So these things are kind of connected, but it seems to me that if the vertical question is sort of down the organization, the top of the shop has got to seriously think about, what are people saying about us? What are we trying to do? And what are people saying about us? So how do I reconcile these two things, and where am I going to go with it? And therefore, what does that mean about what do I say? How do I communicate? How do I engage? What investment do I put in order for people to trust me on a long-term basis? So I think the vertical has I don't think it's quite as bad as Roland says. I think there are many responsible companies that do really think about this question in a vertical way, because of the rise of the horizontal, if that's what the question meant.
Absolutely, and I, I completely agree with you on that. I think, for me, so why do we talk about speak up in organisations? It's not just so people can blow the whistle. Actually, good speak up is about an open and transparent sort of structure whereby the people at the top of the organisation and in the middle of the organisation are actually listening and hear the feedback. And of course, it's not just about the people that work in the organization, it's about the customers, the consumers, it's about the supply chain, and it's about the community. And if you're not listening to what people are saying to you, then probably your business isn't going to survive very long. So to me,
I agree with
this isn't actually rocket science, and it's not that new. The difference is we've got more mechanisms now. And importantly, we're all talking about it, which helps. But with social media and so on, and online sort of rating sites and what have you, there are more opportunities for people to feedback. Of course, there's more opportunity for people to game the system as well. So I think there's you benefit, but also you've got to be smart about it. And of course, there's opportunity for companies to game it as well if they want to.
Yeah, look, I think net though, that's a positive thing.
Yeah.
I mean, look, let me talk about me as very briefly as a leader. It is my view that I am accountable to my colleagues, and I say that explicitly, and sit and talk to them, right, about what's it really like. How do you think about X? Can we get you involved in Y? Our journey through COVID as an organization was because we pulled people into those conversations and said we're going to include you in that. Tell me what it's like, tell me how you feel about it, what can we do to help, and so on and so forth. And I think one of the reasons why we had a 20% jump in morale according to the staff surveys, because people feel included, because they feel like they can say what they want, they feel like we can respond to that. We may not necessarily agree on everything, but at least there's an accountability system which they can say something openly. Yeah. And they will or won't get a response to that, but at least we'll transparently say, I understand what you want to try and do, but I can't really do that, but I can do this. This is the way for, because, and I think most responsible leaders these days do think like that. They do think they're accountable to those constituent groups, not just internally, but well beyond that. And they think carefully about how they can be made accountable for that. If they don't, I think they will not build up trust, and they do not have a long-term sustainable organization. That's my opinion.
Well, I very much agree. Right, I've got a question not in the Q&A box, but is coming outside of that. But I think it's rather interesting because it picks up this tension between, if you like, doing the right thing and doing the wrong thing, and short term versus long term, I guess. So Michael Solomon asks, I'd like to know about the relationship between, on the one hand, purpose, culture, and conduct, and on the other hand, profitability. So if good purpose, culture, and conduct diminish profits, can we expect these attributes to be present in more than a tiny minority of businesses? So it's profit versus purpose, I suppose.
Yeah, look, I mean, let's not kid ourselves. A business borrows money, takes money from shareholders, invests it, and then shareholders expect a return. If there are no returns, the business won't survive and it will collapse. So there is a primary overriding financial health of the organization issue in here. But that's not the same as maximization. Maximization is a really difficult and tricky word, in my opinion. I mean, if we say your goal is to maximize profits, it will take you to unethical behavior. It will take you to, we've got endless examples as the regulator of people saying, oh yeah, but I had to maximize my profits. Yeah, but you didn't actually, did you? And if one might be frank about it, part of Carillion's problem was I need to be able to demonstrate right now that I'm financially in this place, and then something builds up over a long period of time, and then the company collapses, right? And everyone goes, what happened there? And he said, well, judgments were made about long-term contracts, about profit recognition, about income, recognizing income, and so on. And it was unsustainable, but it looked like it was financially sustainable. And it will, to these questions, and there are many of the questions in the column here about how do you act and how do you behave. They go to the heart of the judgments that you make as senior leaders or as a board, and that can take you to a bad place. So I think, yes, clearly there obviously needs to be a return for shareholders. That's not the same as profit maximization. That takes you to, I think, quite a dark and dangerous place of acting only to maximize profits, irrespective of the outcome of that on the environment or on local communities or whatever, or on, screwing your suppliers for an extra tiny little margin because your standard payment terms are 365 days. I was told recently that there was a PLC out there where the standard payment terms are 365 days. So you do work and you don't get paid for a year. Now, nobody's going to tell me that that is acting in a responsible and ethical way. That is screwing some tiny little additional margin out of your supply chain to go to your bottom line and not theirs. That is not a responsible way to behave. And, the risk that company runs is people say, I don't really want to do business with you anymore. I'm going to do something else.
Well, I'm surprised anybody is doing
this
business with them, actually.
Well, me too. I mean, I was quite surprised that it was
Yeah.
120 days. I was told in a FTSE 100 company. I was like, wow. I mean, that is really quite a long time. No wonder there's like the rise of these other kinds of ways of doing it. So I think we should be careful. Yes, there needs to be a return, but no, that's not the same as profit maximization, and we need to be really careful. And I think responsible businesses know that, and they adopt some really good principles like, well, hang on a minute, we need to be prudent and reasonable, not aggressive, which is one of those issues that I talked about in my opening remarks.
Yeah. Okay. Ruth Steinholtz, sort of picking up on that a bit, really, is, how much is this about just behavior rather than, is there too much reliance on codes and rules and regulations? Are we losing sight of the importance of quality leadership and creating effective ethical cultures?
Yes, I think Ruth's questions, I agree with that, which is why I'm sort of, in the end, I come down on we shouldn't regulate this. Yes, we can set codes, we can set frameworks, we can set best practice, but in the end, it's about you, the leader, the leadership group, the board, the way it behaves, how it acts, and so on. And I think that is not an area where we should set down specific, detailed arrangements like you do for accounts and so on. I think this is quite a different thing. It's a tangible, and it's an intangible thing, and therefore, in the end, that's why I come down on, you can do a certain amount, you can set expectations, you can highlight best practice, you can set a code of conduct, but in the end, you have to make the decisions that you make as an individual, as a team, as leaders, and so on.
Yeah, absolutely. I'm jumping to one from Paul Morton, or at least I was, but my screen just jumped. Here we go. Yeah. Holding boards to account. If this is important, how do you feel about deferred prosecution agreements?
I have to be honest. I'm not entirely sure what deferred prosecution agreements are. I'd have to sit and Google it. Sorry, I can't answer that question.
It's not something that the FRC would get involved in. I mean, I presume this is. I mean, I must admit, I'm not an expert in this. I'll tell you what. Let's move on. And Paul, you might want to come back and just add to your question and clarify. Let's move on to some others.
Okay, I've got it.
All right. Okay.
So how do I feel about it? Well, we don't use it. I think we ought to be transparent about that. I quickly Googled it. It looks like it is a tool that's used by some to correct the behavior, some of the worst behavior that might be seen. So unless you change your ways, we will prosecute you for X, Y, or Z. With so you need to do something within a defined period, and you suspend the prosecution by.
I think this happens in the US.
We wouldn't use that.
I
think
think
the SFO
monitorships is something that I think is prevalent in the US, isn't it? Where a company is monitored for a period of time and to assess whether it changes its behaviour in the way required by some regulators.
Yeah, look, to be upfront about it, I'm looking at it on Google. It looks like it's rising in the US. I can't imagine a situation where we'd agree to that. We don't use it.
Okay, fine, good. Thanks for that. Right, I'm just going to sort of work down. Apologies if I've missed any. But Rui Duarte has said, will information transparency and compliance ever be enough if action on problems is conditioned by social, personal, political constraints?
Possibly not enough, but it is a massive step forward. I mean, look, I'm a great believer in transparency and I'm a great believer in accountability, because those two combined definitely take the organization forward. If you are responsible for publishing some information and being held to account for it by whichever party, shareholders or otherwise, it does really make you think about it. And therefore, more information, quality information, which is assured, which drives up transparency and compliance, and coupled with accountability, takes you a long way down the route of improving the way in which people behave and how they act and what they say and how they report, and so on and so forth. And it is pressure. Well, it's a combination. Many boards will act very responsibly. The ones that don't may well find that they get significant pressure, and the way they get that pressure is because somebody holds them to account, either through the information they push out or whistleblowers or whatever. And therefore, I'm a great believer in that set of tools taking us further forward than where we are now.
So, in terms of how we hold companies to account, again, a couple of questions have come in. One is, do you think social media can hold companies to account for ethical behaviour more than governance? And is that a positive or a negative? And that's quite an interesting point. And then perhaps to follow on from that, what about the role of long-term shareholders, i.e. pension funds, founding families on boards? These almost always have a strong interest in ethical behaviour. And what impact can they have, or what influence can they have? So who can influence the actions of boards, I guess, is the question, and how is that changing?
Well, the truth is that anyone can, depends on what the situation is. So the question about social media is the same as the other question about this horizontal information being given out. And you know that many responsible companies will sit and have somebody on Twitter waiting for them to mention the company, and then they will responsibly interact with someone and try and resolve the problem because they don't want the negative feedback. Social media, though, is, as we probably all know, a minefield. And in the end, I withdrew from that because it was such a minefield when I was a taxman. So I think social media, is another method of accountability that didn't exist 30 years ago, isn't it? That's the way it is. What's my view about long-term shareholders, and can they make a significant difference? The truth is, the answer to that question is yes, they can. And in the end, it's because they own the company, and they vote on the board, the members of the board, and they can vote them off, and they can or can't, influence. The problem we have with investors is the level of passivity amongst that community. When we significantly revised the stewardship code early in my tenure, it was to raise the bar and say, if you are going to invest, and we recognize that you have got to be more active in terms of understanding what the company is doing, how it's acting, how's it behaving, the risks that it's taking, what's its forward strategy, what's it thinking about in terms of purpose, and how is it going to invest the money that it's got to build you a long-term sustainable return. Whereas, and if you talk to the chairs of PLCs, they will tell you that the majority of shareholders are passive. They don't engage very much at all. There are some who are great at that. And what we tried to do in our recent award of those who we thought met the stewardship code was to be pretty brutal about these people are actively involved in investing in businesses, taking responsibility, influencing decisions. So yes, shareholders can make a massive difference, but what we need is more shareholders to take more interest. In a couple of weeks, I'm giving a speech at a major investor in the city, and they are, I think, very responsible organization in terms of they know what the board is doing, they know what the risks are, they want people on that board to act in a way that is ethical but gives them a return. So they're trying to do the two things together, but they're heavily involved, but they are not the majority of investors.
Okay, interesting question from Russell Shackleton, which basically is, about remuneration policies and the role of remuneration committees, and whether setting ethical measures would be valuable. Many are looking to set sustainability as well as profitability or EPS criteria to executive pay. But should they be looking at ethical measures or ethical criteria? And if so, what sort of criteria would you like to see?
Well, first of all, to support Russell's the premise of Russell's question, I think moving beyond profitability or earnings per share or other financial mechanisms, measures, is a good thing. And some responsible REMCOs will be moving into the area of we want a wider set of metrics other than just the financial numbers, and we do see that. Now, could that include ethical measures in terms of how are you doing it, not just what's the outcome? Yeah, I mean, that could help in this kind of space. It certainly would, I think, make senior executives think about how are we doing this, not just what's the outcome of it. I mean, in organizations which are not driven by profit necessarily, it's reasonably commonplace to have appraisal and performance systems which do include how did you do it, not just what was the outcome. Certainly civil service, senior civil service, it does have those kinds of mechanics in their appraisal system. I can't actually speak with any confidence or any detail about how widespread that is in listed companies, but I think, yes, that could make a difference. Yeah, because if you make it a target for people and you link it to how much you're going to get paid, many people will focus on it. So yes.
So the last question I'm going to cover, I think, we're running a bit short on time now, but it's a very short question, but it's got the most votes on the board at the moment. And it links straight back to the one you just answered. So I think I probably know the answer. But actually, it's quite well put. Simply from Andy Kahn. Does it pay to be ethical?
Well, I think there's plenty of evidence out there that acting responsibly and ethically is in the long term a better thing for the organization, for the company concerned. I think there is some evidence that supports that. In fact, I think there's a question that actually said that too. So yeah.
So it was a brief question and a brief answer, and I think that's fair enough. I'll just to quickly flag another couple, and if you want to comment, fine. If not, because I think they pretty much stand for themselves. So Robert Smith has said, really, should we be placing more emphasis on directors to be qualified, say have the IOD's chartered director qualification or similar, in order to get these principles embedded. And the other one from Sue Milton, which I thought was quite interesting, was sort of the contrast between what we're looking for through the corporate governance code. We touched on this earlier a bit. I think the corporate versus the individual. Corporate governance code looks to get many in the firm to act as one entity to achieve a consistent purpose and outcomes and value, but each individual has their own moral code and priorities that can lead to other behavior, gaming and so on. And how can the regulator address that, and how can the market that looks for financial profit be aligned to ethical, purposeful outcomes rather than financial gain? If you want
to do Robert's question. Let's do Robert's question because that's quick. Yes, I'm in favour of professionalising non-executive directors, if you like, setting some minimum standards, maybe some qualifications and so on, but use of the word professionalizing. I also think, and we already do recommend this, that the number of non-executive directorships that you can have should be limited to 3. That is already in the code. But we have been able to highlight people who don't do that. So yes, broadly in support of that. Well, Robert's question, look, Sue's question is a bit more complicated, but to reiterate a point, a long-term sustainable business will act ethically. It will act with values and culture. Will have a clear purpose, which penetrates the organization in terms of purpose and strategy and objectives and culture and values, and all of that will align, and there will be a free flow in that, and they will have different kinds of, we'll have a fairly open culture, I think. The market does look for financial profit, but I think there are investors out there saying, hang on a minute, their investors look at the numbers that are produced. They really do know what's underneath all those numbers. Sometimes they actually understand the business better than some of the senior folk on the board. And they do understand when they ought to get out and when they ought to say something. So don't think that just because they're driven by return, that is the only thing that they are driven by. I think there are plenty of investors out there who take a much more rounded view about an entity that they're going to invest in the long term, because that's what they really want to do to get returns.
Yeah. Good. Okay. Well, I think on that note, John, we'd better wrap this up. It just really remains for me to say thank you very much for your contribution. Thanks to the participants for asking lots of interesting, searching and stimulating questions, and thank you, John, for responding so openly to them and with lots of interesting and thought-provoking responses. Personally, I found it a really interesting discussion, it's way beyond the bounds of what you might expect from a regulator, but in a good way, I mean. So thanks very much for getting the debate going and participating so fully in it. We much appreciate it, and we really appreciate your time. As for other than that, let me just thank everybody for participating and say that this event will be, I think, has been recorded and will be available. So if you know people who've not been able to attend and you think they'd like to listen to it, encourage them to do so. That'll be in a few days' time. We've got several other events coming up in the near future. Most nearest to us is a half-day masterclass on speaking up, building the reporter experience in speak-up arrangements. That's on the 14th of October. And our next event, but that's just for IBE supporters, is a very interesting one, given what we've just been talking about. It's Carillion's Downfall, What Lessons Can Be Learnt? And that's being given, it'll be me in discussion with the former head of ethics and compliance at Carillion. So thanks very much. Thanks for joining us. Hope you enjoyed the event, and we'll see you soon. Thank you. Goodbye.